All right, guys, what's going on, everyone? Paul Singh here with Stocks and Coffee. We're going to talk swing trading, the market. We haven't done one of these in a while. My plan is for 2026 to do at least two of these a month, so every other week, and maybe some more as well when it warrants. Give me a little shout out here, who you are, where you're from, and if you're drinking coffee or anything else, what you're drinking here. I got my Bird Rock coffee. It's a local San Diego place that I love. Um, get everything set up here. Someone give me a little shout out and let me know you guys can hear me okay. My screen should be sharing, but I don't see it anywhere. Let's do some shout outs before everyone gets in here. I hope I'm saying your name right. Oh, Andrew, what's going on? Darren, we've got Tracy, uh, Jatin, Anthony, what's going on? Steve, Donald from Connecticut, Jose, how's it going? I recognize now a lot of the names here. Eric, my buddy from Palm Desert. Brian, what's going on from Kentucky? Jose from Virginia, drinking bright black coffee. Chris, what's going on? Thanks for letting me know that the sound is good. And you guys can see, you should see my outline and my screen here. Timothy, what's going on? Srini from Sacramento. Nicholas from Quebec. Hope I'm saying your name right. Shreyas from Portland. David from the UK. Andrew, I lost you guys here for a second there. Andrew from Ontario. All right, guys. Lot to talk about today. First one of these for 2026. Whenever a new year starts, one of the things I like to do, I'm doing this all the time, but it's a really good thing to kind of set yourself in game plan and get ready for 2026. And then that is look at what the trends are, specifically the industry trends. When I build my watch list, and I've got a few of the major watch lists, a lot of watch lists that I watch here. Two of my main watch lists are what I call here my alpha watch list and my Focus 50. The alpha watch list is a big list. Usually it's two to 300 stocks, which sounds like a lot, but it's still narrowed down from the universe of thousands of stocks, right? So I get this list from various sources, but my main source, I would say probably 75% of the stocks on this list are from my industry analysis. The industries that I'm paying attention to, that I'm seeing in play, that's going to be on my watch list. And Focus 50 digs down even deeper. We break down some of those stocks that we really like and add some factors in outside of just the technical analysis. We look at some of the fundamentals like institutional ownership, revenue growth, earnings growth, and so on. And that gets us our Focus 50. And these are the stocks I'm paying the most attention to for potentially trading. And they tend to come from the industries that are in play. And we saw some industry trends late 2025. Some of those have continued into 2026. And there are a couple of new trends, namely energy, oil, and gas, which was not a big deal in 2025, but I think is going to become a big deal in 2026 now. So we'll talk about this. We'll do our industry analysis. We'll game plan a little bit on once we know, okay, these are the trends we're playing. Now, how should we be playing them? And we'll talk a little about that. And if we have time, or I may save this for next time. And that is some option strategy related to what we're talking about. Maybe we'll do that next weekend because this is a lot to cover here. Let's start with our quickie kind of market analysis. I recognize a lot of names here from the swing service. So you guys know this. We do this every day. And for those of you who are in the swing service, if you are interested, I'm going to post the link in the chat here. And there is a 14-day free trial if you want to check it out. Report every day. And of course, the chat room as well. Let me go ahead and post this in the chat. All right, you should have access to that if you are interested. Now let's get to our market analysis. If we pull up SPY here, between the SPY, Qs, and IWM, you're basically getting the whole universe of stocks. And we can look at the S&P 500. It's supposed to be the biggest and the best 500 stocks, right? We see some strength here, obviously. If we pull this thing out, the first thing I like to do is say, what is the trend? And it's very simple. Just draw an arrow. Don't complicate it too much. Sometimes when I ask that question, I'll get traders looking at it very closely and really thinking about it. It should just speak to you. And draw an arrow, either an up arrow, a sideways arrow, or a down arrow. And it's pretty clear here. And I like to do kind of an intermediate trend and then a short-term trend as well. So if we say intermediate, obviously we can see here since April 2025, when we bottomed out here, we've been, the arrow is up and we are in a strong uptrend. So obviously that's good. More recently, we were in, I would say the arrow was sideways, but now back on uptrend. So we're in a pretty strong uptrend, and notice here price action broke too high. So the trend is higher, right? A bullish trend. And right away, when we're doing this, it doesn't mean we plan to trade the S&P 500 or we plan to trade the Qs. What it's telling us is our kind of outlook as swing traders. And that's important. It helps us as swing traders for a couple of reasons. One is if the trend is up, we know most of our setups should be long setups, right? But if the trend is down, most of our setups should be maybe short setups. And if it's range bound, we can get a mix. It also helps us know how aggressive we should be as traders. That's one of the things with swing traders. Maybe a little different than day traders. Day traders, you plan to get a lot of setup every morning that you're trading, right? With swing trading, part of the skill is not only finding good setups to trade, but knowing when to trade them and when to get really aggressive, and then when to pull back and say, hey, I might not take any trades during this period here. And you want to be really aggressive in strong markets. And I always ask myself, am I very bullish? Am I slightly bullish? Am I market neutral? Am I slightly bearish or very bearish? And right now, I would say we would be in the slightly bullish, bullish, slightly bullish to bullish territory here. Not very bullish yet, because we have earnings coming up. The market is not really breaking out, but we definitely should be bullish at this point. Now that doesn't mean you can't take shorts. And sometimes in a bullish market, things get extreme and you have different type of short setups that you can trade in there as well. But you know that most of the setups you're trading right now should be on the long side. If we look at the Qs, notice here, still have that uptrend, but we are not breaking the highs. Tech has been lagging a little bit. It's kind of interesting right now. Oftentimes tech leads, and in a lot of 2025 tech led, right? But towards the end, and now what we've seen is the rest of the market is leading. Notice here, when we look at the industries we're paying attention to, not a lot of tech in here, right? Doesn't mean we don't pay attention to big tech and some other tech stocks, but we have AI and we have semis, which kind of relate to AI right now, and biotech, which can be tech, but it's also like healthcare and relates to healthcare, medical devices, and so on. So not as tech heavy as normal. And we're seeing that when we just compare SPY to the Qs, and SPY is leading right now. Also, we want to pay attention to market breadth right now. We know these indexes don't tell us everything. SPY, again, 500 stocks, but not all, 5 or 6,000 stocks, however many stocks there are. And it's weighted towards certain stocks, right? Most of you guys know this here. S&P 500 is not equally weighted. Tesla and Apple alone, I think, make up about 3% when they should make up about 0.4%. Top 10 holdings make up about 35% of the S&P 500 right now, which is historically very high. So if we want to get a good feel for what are all 500 of these stocks doing, we can look at RSP, which is an ETF that equally weights all of the stocks. So Apple is not worth any more than BLDR, than VST, than Lennar, than DHI, and so on. So let's go ahead and pull up RSP, and really jumps out at us, right? While SPY just broke to the high right now, RSP did it, and did it convincingly much earlier, about a week ago, and broke out very strong, right? So RSP is a leading SPY, which is a good market breadth indicator. So we're seeing strength in RSP. And if we look at QQEW, which is the same thing for the Qs, we don't see it to the same extent, which is telling us that maybe tech is a little weaker. And then if we look at IWM, which is mid caps and small caps, we see extreme strength here, right? Leading SPY and the Qs. And that is a very good sign in the market that the bigger universe of stocks, the smaller stocks, are leading right now. So market breadth, things under the hood are looking good right now, which is a change from before, where we were seeing some weakness in here compared to the rest of the market. So I would say that that's giving us a good indication. Another indicator I like to use is T2108 on TC2000. This measures stocks above their 40-day moving averages. If you're not on TC2000, you can go to stockcharts.com, and they do the same thing for stocks above their 50-day moving average, which will be very similar. I don't know why TC2000 uses 40 instead of 50. But at any rate, we see some strength here. It's been weak for quite some time. The market was high here, and T2108 was low here. But now we're seeing it back at highs with the market. So that's good. We're seeing another strong indicator. So maybe instead of even slightly bullish to bullish, we should be bullish right now when we see these market breadth indicators as well. So all of this is very good for the overall market. So we know that now. We're in a strong market. Markets in an uptrend. Our under the hood kind of market breadth indicators are strong as well. That's telling us we should either be in some trades right now to the long side, or we should be looking to get more aggressive to the long side, right? And now we're looking for the industries we should be paying attention to. And these are some of the industries that I've identified here that most of our trades should be coming out of. Industrials, AI, and energy related to AI. So nuclear energy, data centers, and some of the other stuff related to AI. Energy related to oil and gas, and specifically Venezuela. And this is new with the invasion of Venezuela in 2026. That has a huge impact on U.S. oil companies here, and specifically oil companies that are tied to what's going on here. And we'll talk about that in a second. Retail continues the theme from late 2025. Retail has been strong, which earlier in 2025 had been weak when there were some real concerns about the consumer. And that might also change with news late in the week related to Trump's investment, which is expected to lower interest rates. So we'll talk about that in a second as well. And I didn't add housing into here, but we could probably throw out housing into here as well. Semis, a lot of it relates to AI as well, chips and infrastructure related to AI. Financials, very strong, and we have earnings coming up next week. JP Morgan, Goldman Sachs, Wells Fargo, Citibank, all reporting around the 13th through the 15th. A new earnings season is on its way. And then biotech has been strong as well. So there are other areas you can get stocks from if stock is strong. But I would say most of your watch list right now and most of the trades you're taking should be coming out of one of these areas. If you're looking for trends and quick moves as swing traders, we don't want to hold for a year, right? We want quicker moves anywhere from a few days to maybe a few weeks, sometimes a month or two. We want those trend moves very quickly. And these are the areas where we can be looking for that. All right. Now notice here, I've listed industrials. When we talk about tech, and if you pull up a tech ETF, like say XLK, this is tech heavy, right? A technology ETF. But within tech, there are a lot of different types of stock, right? So we need it broken down even further. If we look at the industries here, while we have tech in this XLK, you have computer systems here, semiconductors, software, and there's different kinds of software as well. If we pull this thing out, and semiconductor equipment and materials, semiconductors, even within software application, you have a lot of different types of stocks and so on. So and solar here is under tech as well. So you have a lot of different types of tech, and industrials are the same thing. If we pull up XLI, which is an industrials ETF, you can see how strong industrials have been, especially since December to now, essentially breaking out here. So industrials is definitely an area we should be paying attention to. But like tech, industrials is a very big grouping. So I'm not going to name all of the industrials groupings, but some of them that we are paying attention to right now: shipping and transports. Anytime we know metals have been moving, commodities have been moving. Anytime you see commodities and metals moving, you see retail moving. Anytime there's a strong economy, transports and shipping are going to be strong because something has to move all this stuff, take it from place to place, right? So industrials are going to be strong. Of course, with what's going on in Venezuela right now, and we still have obviously stuff going on in the Middle East, still have some of the Ukraine stuff going on. Defense and aerospace, very strong. Expectation is this is going to last for a while. So these stocks are definitely going to be trend stocks we want to be paying attention to. Construction and engineering, equipment, conglomerates, those are big companies that do a little of all of these things. And of course, metals, industrial metals, precious metals are in play as well. So these are some of the industrial areas we should be paying attention to. I'm going to hit a few stocks in industrials from each of these areas. Let me look at my list here. Most of these stocks are on my Focus 50 or Alpha watch list here. And your list should comprise a lot of stocks from these areas that we are paying attention to. Anthony, good get here. Anthony mentioned that Jets is moving higher. Jets is an airlines ETF. And if you look at JATS here, you can see very strong. And you can pull up, whenever you have one of these ETFs, if you go to this little bullet point thing here on TC2000, you can pull up all of the stocks that make up that ETF. And you'll get a good list of airline stocks to investigate here. We talked about Venezuela and energy. Another play for Venezuela is with aerospace and defense, or with with U.S. taking over now. There is expectation there's going to be more tourism to Venezuela, and some of the companies already flying into Caracas. CPA is one of the big ones here. This is I believe, a Panamanian airline, CPA, and you can see since the news last weekend, and then Monday was the reaction here. It's reacting. CPA reacted very similar to those energy stocks because of its ties to Venezuela. So that's another stock I would be paying attention to because of the catalyst of recent current events. So good catch with Jets here, and Jets Airlines are in industrial as well. Now they would fall under obviously transports and shipping. UPS. If we pull up UPS here, you can see here it broke out on earnings last October, but still UPS has been in a very strong downtrend since 2021 to 2022. While the market has been going up, UPS has been going down, but recently broke that downtrend, broke the 200-day moving average, had a strong earnings reaction, and now very strong here. Definitely a stock I would be paying attention to. Of course, in shipping, FedEx as well. FDX. Whoops, do I have the right ticker? Does anybody remember? Oh, there we go. Okay, FDX, you can see how strong FedEx has been as well, breaking this 2024 high right here recently after making lows. So this is a very quick move from lows to highs here for FDX. Some of the other shipping companies, we could look at ODFL for trucking, and you can see how strong a lot of these were in downtrends and are now breaking out. ODFL, HTLD, another trucking company, and you can see how strong it has been breaking out of a bottom formation. We have trucking, railroads, CSX has been strong. Maybe a little bit of a pullback here. I'm not sure why. You would think it'd be stronger. But I still will be paying attention to railroads as well. And then airlines, of course. UAL has earnings on the 20th. Delta here also very strong. So shipping within industrials, very strong. If we're looking at defense, there's a lot of defense stocks. I'm just going to pull up a few. Here's Rocket Lab. You can see how strong it has been and just broke out to a high. Lockheed, LMT, General Dynamics, GD, here all very strong. KTOS here very strong as well. MRCY. We could go down the list. You can pull up again on TC2000. You can pull up the industry here and then open the industry India ETF, and you have a lot of stocks here to choose from. So defense stocks and aerospace, very strong. I'll just pick one from each of these. In construction and engineering, Fix is one I'm watching. Road's another one that I like here. Road as well in engineering and construction. Equipment, the big guy, of course, is Caterpillar here. This is farming equipment. REVG, also very strong. This one's in construction related to farming as well. Some of the conglomerates, here's 3M. You can see how strong 3M has been in a strong trend. Not the most volatile, but definitely in an uptrend. And then finally, metals. And metals is kind of a big area as well. Of course, we know gold and silver have been very strong. And then we have some of the industrial metals, FCX, copper stock, STLD, a steel stock, and a lot of stocks to choose from. I've probably got about 15 or 20 that I'm watching in this industry. All right, so that is just industrials. Now let's go to AI, specifically energy. I'm not going to go through the whole AI industry, but in the swing report, we're talking about AI almost every day now. Whether they're in strong trends or pulling back, they're almost always setting up for potential entries. But what I want to talk about now is the energy. Anytime you have these big technology leading kind of fields that are game changers, right now it's AI, right? Back in the late 90s, early 2000s, it was internet. Every decade or so, there's some kind of new industry that comes into play. Cell phones after internet. You could go back to the late 1800s when it was railroads. Railroads was essentially the new technology. We see it as industrials now. But with all of these things, let's just talk about railroads. You have the pure play, which is the railroad company, right? The person who builds the trains or the company that builds the trains. But then you have the infrastructure, who lays down the tracks, right? Who builds this stuff? And those stocks, and then the energy. Back then it was cold, and whatever energy was being provided for the railroads. And while the railroad companies would do good, the pure plays, the infrastructure and the energy were even leading the pure plays. That's the same thing happened with the internet, and the same thing is happening now with AI. You've probably heard a lot about data centers, you've heard a lot about nuclear energy plays, and so on. Those stocks have been stronger than the pure AI plays. When the pure AI plays are great, these are even stronger. So let's focus on energy now, and I'll just pull up a few of the companies. There was a deal late last week with between Meta and I think it was VST. And you can see VST here popped. Now notice here, look at the trend here in VST. VST was a nothing stock for a long time. Look at this from 2020, 2023, did basically nothing between a range of 15 and 25, right? It was just in this range. All of a sudden breaks out in 2023 at 25 and is now sitting at 166. Humongous move, right? What is that? Maybe a 500% move in this period. Now it's pulled back some here. And we were watching for a remount of the 200 and the 50-day moving averages for it to get back on trend. And it had the Meta news late in the week, and you can see it popped on Friday 10%. So definitely a stock we should be paying attention to. There's VST, there's VRT, CEG is another good one. GEV, which is a spinoff from GE, independent power producer, and you can see how strong this has been. Definitely one to be paying attention to. Oklo is another one. Look how strong Oklo is. Oklo has just remounted the 50-day moving average. So I would definitely be paying attention this week to AI energy stocks for potential entries. And then, of course, we have the pure oil and gas energy plays because of what happened in Venezuela. And there has been a split while all of energy has been strong. If we look at XLE, you can see 2025 didn't do a whole lot, but now breaking out, we see Monday there was a pullback here and now strength in energy. But within energy, there are specific stocks that are leading, and that is those stocks that one already had ties to Venezuela, or two, refine or provide equipment or sell heavy oil. I'm not an expert in this stuff, but I think most of us know right now that the oil, they've been talking about how the oil in Venezuela is heavy and it takes a certain kind of refining. So those US, and this is very good for a lot of the Texas related energy companies, refiners, drillers, equipment makers that deal with heavy oil. So I'll just pull up a few of these that we should be paying attention to. Chevron, CVX, we entered this on Thursday or Friday, Thursday, right in here, as it pulled back and then held the 90 MA and the open gap here. We also did an options play with CVX as well. But you can see the strength here breaking out over this range. SLB, Hal, Baker, And we have a few others as well. Let me just look at my list here. Valero, you can see the breakout and strength here. MPC, this one, smaller company here in refining and marketing, and you can see the breakout here. And the whole the overall pattern is not strong, but you see the breakout here, and we'll see if that starts a trend. I think we had a couple of others, PSX here as well. Anthony's mentioning WAB as a railroad company. Harry mentioned DRS. I actually forgot what DRS is. Let's pull this up. And if you guys have any tickers or questions, of course, you can post them. DRS is a defense company. Anu mentioned Aklo for AI energy. So all good tickers here. So we should definitely be paying attention to energy. Retail, we've been watching for a while and trading for a while. XRT is the retail ATF that most people will pay attention to. Notice here it's breaking out to recent highs. Like industrials, like tech, retail is a very big kind of uh, sector breakdown. If we look here and look at the retail stocks, you're going to see when we look at the industry breakdown, a lot of different types of retail that could be moving differently, right? We have when we think of retail, we tend to think of say apparel or specialty retail, usually apparel too, like the mall type stores that sell this stuff or online stores. But auto is related to that. So all of the auto companies are going to be in here, auto parts, car makers, Carvana. But you can imagine there are going to be periods where Carvana is moving very differently than, say, someone who sells pet food like Chewy here. So even though, or grocery stores, you go as well. So that's what I'm really paying attention to within retail. Then semis, of course, we have the Nvidias, the ASML, Taiwan Semiconductor, and all of these are tied to AI. And we're seeing a lot of charts that look like this in fantastic trends. Nvidia has dipped a little bit, just under the 50-day moving average. AMD, very similar as well. Intel just got some news that the CEO just met with Trump, and there's going to be a big investment there. And while this has been lagging for a long time, now it is obviously very strong here. So obviously we should be paying attention to semis, financials. We are in JP Morgan right now, and you can see broke out of this about 6 month box here. Very strong at or near all-time highs. If we look at XLF, the XLF ETF is strong as well. And then finally, biotech. We'll just look at biotech ETF XBI. And notice here the strong trend after a little bit of a deep pullback here recently. Should definitely be paying attention to biotech as well. So we know the industry trends. Now, how should we be playing them? It's pretty simple. With all of these stocks that are in these trends, I'm just looking for one of two things, right? It's essentially continuation patterns. And we're looking for stocks that are in these trends like this. And we either enter them on the pullback to support and a show of strength there. Optimal way to play it, right? You enter here, you have an easy place to place a stop, you have an easy place to place your target, and you're almost always going to be able to get at least 2 to 1. If you're risking $1, you can make $2. Wherever your stop is, you're double on the target or more. And a lot of these are giving us 3 to 1 or 4 to 1 on these things. So we're looking for the pullback plays. If we miss the pullback play, then the breakout of the high, the breakout of maybe as it pulled back, maybe it forms a range in here, and we're looking for the breakouts. And these are different setups. The breakout is more of a momentum play. The pullback is more of a value play, right? Getting it at a better price. But each of them equally valid when you're in a strong trend. And all of the stocks in these, we can look for either breakouts or pullbacks in these areas. And then even though we said we have a long bias, occasionally it's okay to take a short when you're in a very strong market, especially when an area gets very extended. We call that the parabolic short. So we can pull up silver here. You can see SLV very extended right now. A couple of things I like to look at when we're looking at extended areas. One, where are stochastics? I like to see that above 80. And then just look at historically, look at the trends here, and you'll notice anytime price widens the gap between where price action is and the 50-day moving average, you tend to see a pullback. We saw it here, we saw it here. Now it's really extreme here. At some point, we are going to get a deep pullback here in silver. I would expect at some point we're going to get a pullback that'll test the 50-day moving average. What I would love to see here, we got a short signal in here. That short signal has not worked out. And I love that when that happens. You can look at it and say, "Oh, it failed. This sector or industry or stock is too strong." But oftentimes that first attempt fails, and then you get another big move, and that's where the big move will come, and you get the pullback. So I'm watching silver light right now. SLV is sitting at 72. I would love to see this thing get up to around 85 or 90, where it gets really stretched. And at that point, we'll get a really strong reversal. So if we get a really strong reversal signal, there's potential for a big move to the downside. Now, it could still be in an uptrend. We could have the expectation that later on it's going to go to 100 or 150. But in that meantime, we can play a deep pullback and short. Here, the short signal here on silver, maybe you enter at 48, and then you could have taken profits here near the 50-day moving average down at 42, which is more than a 10% move, almost a 20% move. We'll be watching that for silver as well. All right, guys, if you guys have any questions, let me know. Here's my contact information, singjd1@aol.com. If you have any questions, want to talk to stocks or anything, just shoot me a message anytime. Of course, if you're not a member of the Swing Service, you can become a member here, and there's a 14-day free trial, so you can check that out. The new report will be coming on Monday, and of course, we'll be in the chat room as well. Otherwise, remember, you guys are part of the Bulls family, whether you're a Swing member or not. Shoot me a message anytime, and I'll get back to you. I always post articles on Bulls on Wall Street on the blog there. The 50 trading tips is a good one recently. And then there are a couple of good ones on my own site, pauljsing.com. There was the psychology one that I think all of you guys should read. That's this one right here, High Performance Trading Psychology Handbook. This one doesn't matter right now. This was specific to the Santa Claus rally. But the 2026 practical framework, read that as well. I think that you'll find that one helpful as we get into trading in 2026. All right, guys. Great session as always. I'll do another one of these probably next weekend for sure, by the weekend afterwards. Keep on a lookout. I'll post it in on social media, and also, of course, get on our email list. All right, guys. Talk soon.